Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. So you've received your 1099 consolidated from your broker for 2025, and it looks a little something like this right down here. Now for this video, I want to specifically focus on the section of the 1099 consolidated that really is the 1099B. The 1099B will arrive with a summary that looks something like this down here, and it is the summary of all of your transactions related to the selling of securities. Now in the picture below, I have put an expanded version of what this section would look like for 2025. It would say something to the effect of summary of 2025 proceeds from broker and barter exchange transactions. And this is where your summary of short-term transactions versus long-term transactions will be visible. It will say whether your basis is or is not reported to the IRS. Remember that basis reported to the IRS is also referred to as covered transactions, and basis not reported to the IRS is also referred to as non-covered transactions. So typically what you'll see are the proceeds from your sales. Here's the cost basis related to those positions. Here's the accrued market discount related to those positions. Here are the wash sales related to your transactions. And then ultimately we have the gain or loss on these transactions broken out by the categories short-term versus long-term, covered versus non-covered. Okay, so here are the two pop quiz questions for this video. Number one, what is a wash sale and what are the tax implications related to it? Number two, what is accrued discount or accrued market discount, or sometimes just called market discount, and what does it do on your tax return? Okay, starting right here, a wash sale is a loss related to the sale of a security where you purchased the same or a substantially similar security within the 61-day window surrounding the date of sale. So when you hear people typically talk about wash sales, they say if you sell, you can't repurchase within 30 days. Or maybe said slightly differently, if you do repurchase the same or substantially similar security within those 30 days, that would be considered a wash sale. And that's a true statement, but it's sort of incomplete because it's not only just 30 days after, it's also 30 days beforehand as well. For example, if you sold first or shorted a position, and then you repurchased that stock within the 30 days, that's also a wash sale. And remember that all of this has to do with losses. So if you sell first and then repurchase here and it creates a loss, then that would be a wash sale. Alternatively, if you buy first and sell later and that creates a loss, that is a wash sale. The 61-day window is determined as the day itself when the transaction takes place, plus 30 days going backward and then 30 days going forward. Now for tax purposes, two things happen with wash sales. Number one, the wash sale loss is disallowed in the current year. This is the part that most people are familiar with. Number two, the wash sale loss is added to the basis of the securities that you repurchased. This is the part that most people gloss over and probably never check to see if the broker actually added the wash sale loss to the basis in their repurchased position. Let's do an example. You buy stock A on day 1 for $100 and you sell stock A on day 10 for $75. You then repurchase stock A on day 15 for $70. You have now triggered a wash sale loss. And so the loss of $25, in other words, 100 minus 75, is disallowed in the current year. Now, you would generally think that your basis in the new stock A position is $70. Because after all, right up here, you repurchased stock A for for $70. However, since the wash sale loss of $25 is disallowed, it is added to your basis, resulting in cost basis of the new stock A position equaling 70 plus 25 is $95. Okay, then in year 2, you sell stock A for $110 and your gain is 110 sales price minus your cost basis of 95 equals a $15 gain. Okay, now in order to double check the math, this gain should be economically equivalent to the gain realized if we ignore the tax rules and just look at the sum of the actual transactions. So transaction number 1 was we had a $75 sales price less a $100 purchase price equaled a $25 loss. And transaction number 2 was really a $110 sales price less a $70 purchase price equals a $40 gain. And therefore the sum of the transactions are a $25 loss plus a $40 gain equals a $15 gain. Therefore, the results with or without the tax rules are economically equivalent, ignoring the time value of money, and therefore the wash sale rules are less of an economic issue. They're not a permanent economic issue. They're really more of a timing issue. And so any time value of money impact comes from the fact that they are a timing issue. So to summarize, a wash sale will either number 1, increase your taxable gain, or number 2, reduce your taxable loss in the current year. So for example, in the first transaction, we had a loss of $25, which was disallowed. Therefore, the wash sale rule reduced the taxable loss in the current year. The statements reduces taxable loss or increases taxable gain are equivalent things. Those are equivalent statements. And then the wash sale will either, number 3, reduce taxable gain or increase taxable loss in a future year. And you can see right here the economic reality of transaction 2 was a $40 gain, but we only recognized a $15 gain actually in year 2 because of the wash sale rules, and therefore in the future year the wash sale reduced the taxable gain. Okay, now for calculation purposes, the chart below works as follows. It's going to be proceeds from the sale minus the cost basis minus the accrued market discount plus the wash sale equals taxable gain or loss. By the way, check out this review that I just received related to the tax season 2026 prep and planning class. It says, "Justin, thank you so much. That fixed the problem. You were a much better help than those idiots they have manning the phones at TurboTax." And of course, you all know the saying that a picture says 1,000 words. So what this individual could have done was simply provide this picture right here, showing number crunch nerds over here on the right, and then the phone workers over at TurboTax on the left. By the way, you can watch a video FAQ all about the tax season 2026 prep and planning class at the link in the description below this video. Okay, so now going back to pop quiz question number 2, what is accrued market discount and what does it do on your tax return? Well, for tax purposes, accrued discount or market discount is a reclass from capital gain treatment to ordinary income treatment. Now, here is an example of why that is the case. Let's say your financial advisor purchases a fixed income instrument in the market and that instrument has a face value of $1,000. However, you buy it in the market at a discount. Let's say that your purchase price for that instrument is $900. Now, if you were to hold that instrument to maturity, the instrument issuer would pay you the $1,000 face value at the end of the term. And that $100 difference between the face value and the purchase price, that represents the interest income that you earned on that instrument. And make sure you understand this point right here. When a lot of people think about a fixed income instrument, they basically think, well, I'll hand over $1,000 and I will get back $1,000. And in the meantime, I'm going to be paid some sort of interest rate or coupon rate. However, this setup works a little bit differently. Often right here, there is no interest rate or coupon rate paid along the way. Your interest income is earned by you purchasing the instrument at a discount and then just redeeming it for face value at maturity. Now, I want you to note, very important to this example, that the $100 of interest income is not earned at maturity when you redeem the instrument. The $100 accrues or is earned bit by bit over time as you hold the instrument. And I also want to note that interest income is considered ordinary income for tax purposes. Okay, now let's go back to this step over here, but instead of you continuing along this path and holding the instrument to maturity, you don't hold the instrument to maturity. You go down here and instead you sell it in the market for $980 before maturity. Okay, now let's assume that during the time that you held the instrument, sufficient time had passed that you effectively earned or accrued $20 of the total $100 of potential interest income. So while at first glance, your capital gain on the disposition of this security over here appears to be $980 of sales price less $900 of basis equals $80 of capital gain, the tax treatment is that $20 of that gain really relates to the amount of the discount that you earned during the time period when you held the instrument. So therefore, the $20 will be reclassed to interest income on your tax return, and the $80 of capital gain will be reduced by the $20 that was reclassed, resulting in $60 that will remain as capital gain. So you still have $80 of total income in this example. It's just that only $60 of it will be capital gain subject to capital gain treatment, and $20 of it will be reclassed into interest income, which is subject to ordinary income treatment. Okay, so now if we look at this 1099-B summary and calculation again, we have to add one component that we did not have there earlier. So remember that I said the calculation is proceeds minus cost basis minus accrued market discount plus wash sale equals the taxable gain or loss. It's not just that when I say minus the accrued market discount that the market discount amount just disappears. Instead, it is subtracted from this calculation of the capital gain, and then it is effectively moved over here to this bucket or added to this bucket, and it becomes interest income. And then the capital gain calculated right here goes on Schedule D of your tax return, and the interest income calculated down here goes on Schedule B of your tax return. So now, if we go through this example summary for 2025 of these proceeds from the disposal of securities, and we follow this chart through to the tax return, let's start with this third transaction right here, because this one is very easy to see. We have $92,000 proceeds, $52,000 cost basis. Then we're also going to subtract out this $7,879 of accrued market discount, resulting in a capital gain of $31,764. Going down here to part 2 of Schedule D, long-term capital gains and losses. There's our $92,000 of proceeds, there's our $52,000 of cost basis, there's our accrued market discount being subtracted out, and there is our capital gain of $31,764. But we're not done. Where does the $7,879 have to go? It goes right down here on Schedule B for interest income, 500 shares of XYZ, accrued market discount, 7879. This is the schedule that reports interest income. And then one more example here using a short-term transaction, 142 of proceeds, 128 of cost basis. We're going to subtract out this 5,971 of accrued market discount, and we're going to add back this wash sale loss of 2,734, resulting in a gain of 10,553. The net of these two items in the blue box, minus 5.9 thousand and plus 2.7 thousand, results in a net adjustment on our Schedule D right here of a negative 3,237. And then which part of this right here ends up on Schedule B as interest income? And the answer is only this 5,971. Again, looking down here on Schedule B, there is our disposal, and there's the accrued market discount related to it showing up as interest income, 5,971. The wash sale, remember, is not interest income. This is a timing issue where our loss has been reduced, or another way to say that is our gain has been increased by this amount right here. And in a future year, when this new position is ultimately disposed of, the related gain in the future year will be reduced, or the related loss will be increased. By the way, in order to get everyone organized and ready to go for the 2026 tax season, my fully updated 2025 tax prep / 2026 tax planning information organizer is now ready and available for download. The tax organizer is available to all of my viewers, and it contains over 197 tax questions and related guidance to help you get all of your tax ducks in a row during the 2026 season. You can find a link to download the tax organizer in the description below this video on YouTube. In addition to that, my 2026 tax season prep and planning class has launched as of February 1st, 2026. The class will be running through April the 15th, 2026, and all class sessions have been recorded, so you can log in and watch every training video on your schedule and at your convenience. This 10-week intensive tax class will dive deep into the world of both tax preparation for 2025 and tax planning for 2026 and beyond. You can find a link to the video FAQs about the class at the link in the description below this video. And so that's going to be it for today's video. Thanks everybody for watching, and I'll see you next time.